Hello dear students, good morning to all of you. As we were discussing about financial management, and in the previous classes, dear students, we have discussed about the definition, or we can say simply the meaning of financial management, and thereafter we have discussed about the different sources of finance. Now dear students, today we will discuss about the aim of financial management. Dear students, as we know that the financial management is needed, or we can say that financial management is very much required so that we can reduce the cost of funds procured, because whenever we are raising any kinds of funds, we must have to think about the cost of raising the funds. It means at what rate of interest, or what is the dividend rate on which we are going to raise the different sources of funds. If the funds are available at a higher cost, then it will be more risky. So dear students, for each and every financial manager, it is the first aim to create the source of finance at the low cost, or we can simply say that we should reduce the cost of the funds so that it will not create, or it should not create any kind of burden on the business organization, and it will not reduce the profitability of the organization. Now dear students, the next aim of the financial management, that is to keep risk under control. Dear students, until or unless if the risks are not under control, then it is quite impossible to maintain the business finance in appropriate way. So for reducing the risk of the business enterprises, this is the second aim, that the funds which are going to be raised, that must be less risky. Suppose that if we are borrowing if we are borrowing funds from the bank or other financial institution at the highest cost, and if the business is not earning adequate profit, then it may be the reason of the loss, or it may be no profit or no loss situation. So for increasing the profitability, we must have to find different alternative sources, so that the burden of the cost must be reduced, or burden of the cost must be less, so that the risk on the business must be less or under the control. Thereafter, dear students, this is one of the more important aim of the financial management, that is achieve effective employment of the funds. Dear students, as I have already discussed about it, that financial management does not think only about the different sources of fund, that how to raise the funds from the different sources, but it also emphasizes on proper allotment or proper utilization of the funds too. Until or unless the funds are not going to be utilized properly, then it is quite impossible to make the financial management effective. So dear students, this is the duty of the financial manager, that they must have to employ the funds, or we can say that we must have to allot the funds on the different applications, or on the different uses according to its needs and requirement. Therefore, dear students, first of all, each and every financial manager thinks about what is the requirement of the business, how much funds are required, and in what sector of the industry this is required, and how much. Suppose that if the business is capital oriented business, then what is the fund required for establishment of the fixed assets or fixed capital, and thereafter what is the need of the working capital. Until or unless these ratios are not going to be properly decided, then it is quite impossible to achieve the effective employment of the funds. So this is the third aim that a business must have to think about, or the financial manager of the business must think about the appropriate, or we can say the optimum utilization of the funds. Now dear students, the fourth aim, that is to ensure the availability of the sufficient funds while avoiding idle funds. Dear students, only raising the funds is not sufficient. Suppose that we have raised the funds of rupees 100 crore and now the business is utilizing only 80 crore of the available funds. Still 20 crore of the funds are idle, but now you were thinking that if the business has surplus fund, it will be beneficial for the business organization. No, not at all. Because whenever we are raising the funds more and more, then if it is kept in the business as idle fund, then there is no contribution of these funds in the profitability. Instead of the contribution in the profitability, these funds need to provide interest or dividend to those sources from where or from which sources we have raised the funds, raised the finance. So dear students, if these 20 crores are not going to be used, but still we have to pay a certain rate of interest on these funds. So this is the duty, or we can say that this is the aim of financial manager, or this is the responsibility of the financial manager, that they should ensure that the funds must be sufficient and this should not be much more excess to the required fund, so that the idle funds can be in the organization, idle funds will be in the organization. Because in the business organization, if the funds are much more available, if the liquidity of the business enterprises are more, then it may leads to the wastage of the funds too. We cannot think about the appropriate, and we cannot think to perform the work at the economy level. So dear students, these are the four basic aim of the financial management. Now dear students, we will discuss about the different objective of the financial management. So in the term of the financial management, dear students, it has categorized in different objectives. So first of all, we will start the discussion of the primary objective of the financial management. Dear students, in the primary objective of the financial management, as we know that each and every business enterprises have been set up for the purpose of earning profit, and each and every business enterprises are running for the motive to maximize their wealth, maximize their profit. So the primary objective or the primary concept or of the business enterprises to maximize wealth of the owner in long run, and wealth maximizes, therefore it is also known as wealth maximization concept. Dear students, the owner of the companies are shareholder basically, and as we know that equity shareholders are the real owner of the company, and as we know that they have the opportunity that they can demand for excess dividend, they can demand for surplus dividend if the firm is earning profit, if the company is earning more and more profit. So the financial management thinks that how the shareholders' wealth is increased due to maximization of the wealth. So dear students, the term wealth refers to the wealth of owner as reflected by the market price of their shares. If the market price of the shares will raise, automatically it will raise or it will increase the wealth of the owner or wealth of the shareholders. But for this, the market price of shares is linked to three basic financial decisions, that is investment decision, financing decision and a dividend decision. Dear students, if the company is providing high rate of interest or a company is providing the dividend at a higher rate of return, then automatically each and every people or each and every business enterprises would like to invest in that particular shares. And as the demand will increase in the investment purpose from the market, then automatically it will increase the price of the each share. Suppose that, dear students, if a shareholder is purchasing the share of rupees 100 at rupees 100 per share, and that shareholder has purchased 1000 shares, it means that shareholder has invested rupees 1 lakh in the business. Now due to good dividend provided by the business enterprises, the market value of the shares are increasing. Now the rate of the share is increased to rupees 200. Therefore we can say now the value of 1000 share will be 2 lakh. It means the owner has invested rupees 1 lakh, but now at the present date the value of these 1 lakh is equal to the value of rupees 2 lakh. So dear students, due to increase in the market value, due to increase in the market price, the share price the wealth of the shareholders are increasing. So dear students, these are the primary objective of the financial management of a business enterprises. Dear students, now I think you all have got it. Now tomorrow we will start the discussion on the different policies, that is dividend decision, financing decision and investment decision in details, that how a business enterprises can make the dividend decision or how a business enterprises should adopt or take the financial decision and dividend decision so that the wealth of the business enterprises can be maximized. Till then, thank you.